Johnson and Johnson down. Let me see. What's going on, everybody? How we doing? How we doing? How we doing? Um, share my screen like always. So I want to show you guys some trades that I'm looking at. But so far, as far as this morning, we had some earnings and we had import price index come out as well. So that's giving us, some insight on, companies' earnings, and we had bank earnings. So I'm gonna go over that in a second. All right, so as far as and they said Mark Zuckerberg back in court, man. I don't know, he tired of going. He was in court all Biden administration. I would be tired of going too. I would be tired of going too, man. But so as far as earnings, we had Johnson and Johnson. They beat on revenue and earnings, so that was good. Bank of America, they beat on earnings, on revenue and earnings, so that was good. Citi, they beat on revenue and earnings. PNC Bank, they missed on revenue slightly by 3 million, but they beat on earnings. So we had some pretty good earnings from, especially from Bank of America and Citi, and they actually reported saying that their traders had record profits. So during this downturn, while everybody is literally trying to tell you that, or they're showing you that a lot of companies and institutions are moving their money to other markets, foreign markets. These companies are having record profits from shorting the market. So, yeah. Oh, forgive me. I should be good today though. I'm good. I got proper sleep in today, so it should be good. But yeah, so that was good, man, as far as earnings go. But they did also say that they are kind of like warning of the future outlook, as every company is, man. Every company is doing it. But the traders had surpassed the expectations at Citigroup, so that was really, really good. And they're looking to hit a key profitability target. So obviously, that was really, really good. Bank of America stock traders posted a record quarter, reaping the benefits of volatile markets. So to let you guys know, when the market is volatile, that's when you make more money. Because if you go short, you make more money when you short the market. And if it's really, really volatile, this is doing nothing but adding to the implied volatility. And if you're short while the market is going down, it's actually increasing your returns. So you make a lot of money in a volatile market. So while everybody is scared of a volatile market, I think we should definitely be actively trading it, actively investing in it, because that's where you make the most money at. I know it's hard, I know it's difficult, but this is the time for you to be trading. If you learn it, like obviously focus on long term investing first, for sure. Master that. So me, I feel like I've mastered long term investing as far as knowing where the price is going to go, knowing where to invest. Now my next feat is to master trading because I'm not necessarily the best trader yet. Still definitely have room to improve for sure as a trader. But long term investing in leaps, those are pretty easy. Got that in the bag. So now, um, swing trading is the next feat to just master it. Not saying that I'm not good at it. It's just like master it though, master it. So, um, trying to see. I can't see the chat for some reason. There we go. Now I can see the chat. Good morning. Good morning. Good morning. Good morning. Good morning. Good morning. Good morning, everybody. Good morning. Good morning. Good morning. Um, Auntie. Good morning. Crystal. Good morning. Dana. Good morning. How we feeling? How we feeling? Um, what is a sweet spot for volume? I asked because I've noticed green above the 50 EMA and 200 volume below volume. Trying to understand the volume indicator. Um, okay, so when it comes to volume, volume can be a little bit tricky. I need to even read a book on volume to like fully like know it in and out, like the hedge funds, like and know how they're trading it. But volume is very important. So volume, just to give you a description of volume, volume is basically how many people are trading whatever company or whatever asset that is. And obviously, high volume means more people are interested. It means it's more liquid. And by liquid, I just mean like more people are trading it. So it's gonna be easier for you to get in and out of contracts. Or it's gonna be easy for you to get in and out of that stock, right? So I would say a sweet spot is different for a specific sweet spot is different for every company, but I will say you want volume that's over 1 million as a general rule of thumb, just because anything other than that, um, you're gonna start running into liquidity issues, which is why I keep telling you guys you should focus on the American markets, not foreign markets, because you don't know what type of liquidity issues that you are going to have if you're trying to invest um, in other companies outside of our market. But amazing question. So yeah, I would definitely say, just ah, $1 million, a million in volume is definitely a good sweet spot for sure. Great question. Amazing question. But I'm about to run through and see. Um, so by dollar volume, Nvidia is number one, Tesla is number one, Palantir is number two. So like going back to volume that you're talking about, um, and Bookings Holdings actually has some volume, so they creeping up. Johnson and Johnson, obviously they reported earnings. Micron always has good volume. ServiceNow is in here now. Um, MicroStrategy, AVGO, Amazon, Meta, Microsoft, Apple, and okay. When you have a company that's small like Palantir, and it has like high volume with Nvidia, Tesla, and Apple, that's telling you that a lot of institutions and hedge funds are trading shares and they're trying to get into the asset. So just know, like the higher the volume, the more institutionalized the asset is. Um, yeah, for sure. And I think the book is just called Volume Profile on Amazon. That's so I have it in my cart. I just have yet to order it. Um, but yeah, LVMH struggling, Airbnb struggling. And here's the thing, like here's the crazy thing. Airbnb, I think they have like a, let's look at it. Let's look at it because I was looking at this the other day. Airbnb is down, right? So over 5 year period, they're only up 66%. Not good at all. That's averaging like 11.25% per year. Um, Revenue has consistently been going up though. They had a stump in 2020, obviously, because you have a shutdown. Um, Profit margin is 23%, so that's good. Free cash flow continuously growing and increasing. If I go to ratios, y'all know I don't care about no PE ratio, but for them to have a 27 PE ratio, that's not bad. Good morning, Destiny. How we feeling? How we feeling? How we feeling? That's not bad. A 27 PE ratio, like you got to know what every type of investor will look at to get in a company so you can beat them at their own game. So if I was a value investor and I'm looking at PE ratio and I'm looking at the chart, like this would be it would be, it's getting close to an amazing time to invest in Airbnb and hold it for a long period of time. So what you want to do is when the travel industry is down, like they're about to be down now. So I'm telling you guys ahead of time, because as inflation continues to tick up, I do think you're still going to have people travel for sure, but I think the outlooks are going to be worse, causing um, people to, kind of pull back spending on, like leisure, airlines, and things like that. So that is the time where you want to invest. You want to invest when people have no confidence and low confidence in a company. So Tesla has had multiple times where people had low confidence. The EV market um, outlook wasn't good. People were questioning if the EV market was a real thing. What like? So you want to invest in the heat when people are fearful. And then if I just pull up a chart, um, if I pull up a chart on, let's just go on TradingView, Airbnb, like for them to have a 23% profit margin and the chart to look like this, sometimes you don't need, because people always ask me like, well, if it has great fundamentals, then why is the company down? I don't care. I don't care. Invest in a company at a really good price. Invest in a company that has a good profit margin, growing revenue. If I was a value investor, 27 PE ratio is not bad for a growth company like this. They just IPO'd in 2020. And if I'm seeing how far off the high they fell about 60%, 62%. So I don't care. And even let's say you buy them at 103, right? You bought them at 103. They don't even have to get back to the all-time high. Let's just say it got back to $156. That's still 51% return. So even if a stock is downward facing, you can get a good return on it. But I think Airbnb is a slept-on company. Um, I do like other. I will say I do like other companies better. I really like bookisholdings.com. I'm not gonna lie. I love Bookis Holdings. I want to get one share of this company. For sure, they're up 220% over a 5 year period. Financials are looking good. Revenue is going up, right? Since obviously 2020 had the stump. Profit margin is 24%, consistently, getting back to the levels before COVID. Um, so, but um, bless me. But like looking at Airbnb at bookasholdings.com, they have this trend line that they're eventually going to come back to at some point, and the trend always wins in the end. So at some point, they're gonna come back to this trend line. But just looking at the chart, if they ever came down to like 3,200, that would be a good level to invest. And then too, like the high point is 5,000, right? So if they came down to 3,000, that's 40% off of the high. I know a lot of hedge funds would look to get in a company like bookholdings.com around, 40 or 50% off the high. And then if you guys are in Apex, you guys already know what indicator you should be using to know exactly where um, to buy. So um, haters to use. But so sometimes you don't need a reason. Like if the company is good and the stock is down, I don't care. There's a difference between a damaged stock and a damaged company. I want to invest in damaged stocks with great companies, not damaged companies with great stock prices. But this morning, as far as trades go, I'm looking at Airbnb. It's one that I added. So obviously they're down on a week, they're down on a day, and the 2 hours where we will look to get our entry. So if I take the color indicator off, one touch, two touch, three touch, four touch, fifth touch. So they're just continuously pushing down in a downtrend. So once they come back up and touch this trend line, we'll definitely be looking for an entry for sure around 120 or so, or like 119, and then ride it back down to 112. So that'll be a good trade to the downside. CLX, and then I think the rest of these are ones that we already went over, but let's just run over them again so you guys. So you guys can just get used to see them. So on the week we're down, on the day we're down, we got this channel pattern. So basically a downtrend, one touch, two touch, three touch. So if when they come back up here, I would definitely look to get an entry to go short, and then ride this down to the bottom of the pattern. DFS is another one as well. 1, 2, 3, 4, and this downtrend that they are having. This is 2 hour time frame. So once they come up and hit this trend line, I would definitely look to go short as well. And then you can see that we're down on the weekly time frame. We're down on the daily time frame. FedEx, same thing. They got a downward trend line. They get whooped by Amazon. The great thing about doing your research on companies, if you go, all right, so everybody Apex, you already know what we're going to look at. But interesting enough on FedEx, obviously, you got revenue by segment, but they actually show you average daily package type on FedEx. So you can see like most of their packages are ground, which obviously that's more feasible, right? But it's almost doubling their express package type daily. So it's just interesting to see. So yeah, definitely look to go short on FedEx, Dollar Tree, Ranger. So you can see we're down, Ranger, so easy, short at the top of this range, go long at the bottom of this range. Obviously, in this market, favor going short, so I would love to go short more than I would love to go long. Marriott is one, and Marriott is also a good company as well. They have I think a 43% profit margin, I believe. Let's see if I was right. 35%. So they have 48% profit margin 2023, 35% profit margin in 2024. So Marriott is actually, it's not a bad company at all. And they, if I look at their revenue has been steadily, climbing. So like, oh my gosh. Here we go. On a long term basis, like if you like Marriott wouldn't be like, let me see the return. I mean 186% return over a 5 year period. I mean, I can't argue with that. But it traditionally wouldn't be a company that I would invest in. But if you use a company, um, why not invest in it at a good price to get a return on it? But they have this channel. So one touch, two, three, and then obviously, when they come up and touch again, we will look to go short. And they're below all the EMAs. So if we come up and we hit this and the 72 and we're in the downtrend, it's putting a lot of odds in our favor. And I want you guys to notice, so like what I have been doing. So I have a lot of like trades just set up. I think I have around, okay, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, I have 12. So what I'll do when I'm scanning for trades, if I find, let's say, like a weaker setup. So I would say pretty much like out of all these companies, maybe I don't know, let's say CDW. Right, let's say CDW is like one of the weaker setups that I have. I'm always looking for the best possible setup possible. So, and it may just even be to like me personally. If I'm just like, well, I see this setup, but I'm just not really confident in it, I'll take it out. If I find a company that has a better setup, I'll take that setup out and switch that company out with another one. Um, Come on, man. Mercado Libre said they gonna increase their workforce by 33% in 2025. Recession, who? Everybody's sleeping on Mercado Libre. Yeah, we don't want to invest in it because I know it's $2,000, but you gotta get a share. You gotta get a share. You gotta get a share. Talk about international companies. And international companies do not do stock splits. So you just gonna run up the bag. That's why bookisholdings.com is so hot. Carl Libre, gonna run up 275% returns. No company nobody ever heard of before. They is the Amazon basically like I think Mexico. If I go to the profile, uh so they do online commerce in Brazil, Mexico, Argentina, internationally. 275%. They're killing the S&P. Killing, killing. They got better returns than Amazon. Okay, let's look at Amazon. What Amazon has done over the last 5 years. Come on, dog. Amazon, what you doing? That's why you now a retirement pick. You lose your spot, bro. You lost your spot, dog. And that's why investing at a great price is so important. I'm up a lot on Amazon percent wise, but if I didn't buy Amazon at a great price, like okay, if you bought Amazon in 2021, you are flat. Your return is flat. Trying to learn trading, companies are starting to trade above their EMA 50 and 200. So once they start to rise above them, um, Um, I'm not sure like what your question is. So you saying so you're trying to learn trading and companies are starting to trade it back above the 50 and 200 moving average. Um, I'm going to assume that you would say like once they start to rise above, that would be like an entry, a time for you to look to enter. I'm assuming. Um, it does depend on the time frame, but I mean, I would. It's such a layered question. Like there's always like there's always a but. So I mean, a general rule of thumb, you can say like, okay, if the companies are back, or if the company is above a certain EMA, you can look to go long, or if it's below a certain EMA, you can look to go short. Um, but I'm just more so looking for the pattern. A Palantir, they report earnings on May 5th. They report earnings on May 5th, so they finna when they report this 20% profit margin, boy, and they say companies have increased their spending, boy. Now I want you guys to learn quickly. So this is what I had to do, right? Let's say you miss Palantir. Um, I like Tesla, I like Bitcoin. So those three and Nvidia, right? So those four. Let's say you miss Palantir. Okay, you miss Palantir. Make sure you don't miss the other companies that can give you a very high return, like Palantir. Okay. So Palantir is gonna come back down again. You're gonna get another opportunity. Um, it's inevitable. It's inevitable. So when it does come down again, and that's even on me, I promise, if I had the same data that the hedge funds use, I would be spot on with these prices. I would. But I'm gonna start adjusting the prices to make sure we get filled instead of trying to be like absolutely like all the way correct down to the actual cent. Um, because that limit order going off is the most important thing. So and even now, like I'm still learning and improving with the prices. But like after this week, I seen pretty much or after like the last few months, I've pretty much seen everything I need to know from a hedge fund perspective of what they're looking to do. And it's as far as like adjusting the prices a little bit, I know like which ones to adjust on. And typically, like it's really relatively simple. On all of the growth companies, they're waiting for them to come down. So yeah. But I like about labs going short here. Um so when they come up and they hit this level, um definitely looking to go short here. And we see that they go down most of the time on a Tuesday. So if we could, get this entry at the top, that would be good. Okay. Okay. And then the contract I'm looking at is a 135 put. Expiration is 5/16. Okay. I like MicroStrategy too. Um, Airbnb. The only thing I don't like about this, I can't like drag. I wish I could drag the company um higher. But ODFL looks nice too. To go short, one touch, two touch, three touch, four touch. Come back up here, fifth touch, and short it down to this level, and it keeps hitting this level. So I'm sure we're gonna break below this level. Like this is like a descending triangle pattern. So we're either gonna break to the downside or we're gonna break to the upside. And from how it's looking, it looks like we're gonna break to the break out to the downside. When we do hit this level, but we come up here, hit this downtrend and the 100 EMA. Be a very a lot of things going in our favor. Just being patient. We are up today, so S&P is up 0.24%, Nasdaq is up 0.3%, and the volatility is not as high so far. So that's starting to look really, really good. Because when the market, even like when the market is going up 1%, 1.5%, 2%, Even in a down market, that's not really good. You want low volatility. So the fact that we're rising with low volatility, um, it's good. Boy, you know what? And the okay, what's honestly crazy while I'm waiting on this trade, I will say what's honestly crazy. It's really crazy how like God will put you uh through stuff or like put you in situations, I guess, or like make you learn certain stuff. And you never know when you're gonna use it, but you're gonna use it at some point. So like me, I started trading Forex first. I started trading Forex first. And it's just crazy. Okay, I went from Forex to futures to now options because I know most people are trading options. That's the easiest thing for most people to do, just trade options. Um, but all of it, like all of it ties in together. All of it ties in together. So like that conversation we were having at Apex about like the currencies and how you can make money from not only trading stocks, but if you like um use that tactic with the currencies, like that's what I'm listening to them talk about on Bloomberg now. She's saying like owning the Swiss franc. Who wants to own the Swiss franc? Who wants to, I don't want to own no Swiss franc. But if I'm looking at it at like a hedge fund perspective to see like what they do, um if the Swiss franc is like down, because I want to see the ticker. Let me see what they chart look like. The Swiss franc. Wait till it come out. Uh, okay, so the Swiss franc is going up. So the opportunity to get the Swiss franc, it was at 110. So it was at $1.10. Now it's at $1.22. So if I'm looking at that gain alone, um, that's a 10% in that's a 10% increase. So if you borrowed money in the Swiss franc when it was $1.10, and you use that money to invest in the stock market, um, Nvidia, TSM, Microsoft, whatever, Apple, what other companies you guys like? Google, Meta, right? So you're borrowing the currency while it's weak, and you're using that money to invest in the market. When you get your gains from the market and then you liquidate in that currency, the currency is now stronger. So you're gonna get more money on that. Like it's somebody put me in a hedge fund seat, please, please, please. I'm gonna outperform every time. I'm gonna do it every time. They just think too much. But no, I'm just man. I'm Joseph. I'm Joseph. But that's why I love giving you guys information. It's the same thing to me. But yeah, investing gets so deep when you really learn it. Like you gotta go past just stocks. So and now I truly honestly get it. I truly honestly get why investing is hard for like the average, like the everyday person. Because if I like when I was making the courses, and like obviously I'm adding more stuff to the courses, right? I'm just thinking like, dang, okay, you gotta know what stocks to buy. You gotta know where to buy them. You gotta have portfolio management. So that's portfolio management is completely separate from what stocks to buy and where to buy them. You gotta have asset allocation. How much are you putting in this stock? How much are you putting in this stock, right? So you gotta know how to break it up. You gotta know how many companies do you want to own. Do you want to own ETFs? What's your risk? What's your risk appetite? What's your risk profile? Do you not like some people don't want to own Bitcoin. Do you want to own like well, MicroStrategy is more volatile than Bitcoin, but do you want to own, a company that's pegged to Bitcoin that's not as volatile? So then you got to have a mental process. You got to mentally be astute to invest in the market. Then you got to have a trading strategy, a trading system. So you got to know how to swing trade. You got to know how to do leaps. You got to know how to not only trade, not only just use that strategy and trade that strategy, but now you need an allocation and scaling in and out strategy for the strategy that you're using. So it's very, very layered. So now I definitely understand. Um, because to me, in my mind, at first, I'm like, man, it's not hard. But when I look back and I'm just thinking like how much you actually need to like continuously like it's just honestly, it's just a system. That's all it is. But you gotta have the right system in place to perform. MicroStrategy looking good too. 777. We just got to get above this 100 EMA. And then we out. Then we good. Um, let's see what Adobe looking like. Even Adobe, for Adobe to be down this much, I think it's overdone. Honestly, I will say I do think it's overdone. I'm not gonna lie, because Adobe has let's see. Adobe has a let's see. Um, this is crazy. Adobe is up over the last 5 years. Adobe is up 3.67%. So talk about knowing where to buy. You can't just buy asset blindly, but Adobe's revenue has been going up and to the right. It's over the past since 2015, all they have done is increase their revenue. Profit margin, 30%. So that's good. Gross margin, almost 90%. So the cost that it takes to actually run their business, which any software business, okay, my Apex, zero overhead. Well, I'm not gonna say zero. Obviously, subscriptions to like stock analysis, transpire, stuff like that. Like you have subscriptions for the data that you're using, but overhead cost is low. I don't have a facility that I have to pay rent in, or I don't have a building that I have to pay the water bill at, right? So that's why tech companies are always the best because they have low overhead because it's just the software that you're using for your product. Like Google. Google does not have high overhead. Now, by choice, they chose to go get all those buildings. Like, how many build? You don't need that many buildings. So, if I was a company, I would more so focused on, I don't want to say a work from home environment, but I don't know. I would not expand that rapidly to get a bunch of buildings to house employees. Especially now they talking about cutting the work week. So I just don't think that makes sense. But I think the sell off in Adobe is definitely overdone. I will say OpenAI is like killing y'all. ChatGPT is killing y'all. But I think it's overdone. Would I personally invest in a company? No. Mm-mm. Just even though they have a good profit margin, the innovation. So I remember I always talk about world conflict resolution, politics, economic earnings, and innovation. Innovation is important, and I don't think adding AI into Adobe will save them if it's a lot easier. That's why Canva is so important, and I cannot wait for Canva to IPO. Canva made putting presentations and projects together easy and possible for people who are not good at um let's say presentations, or like they even added like Google, y'all need to do. That's why I get upset, man. Google, Canva is killing y'all business. Canva. I use Google Meet. I got trade lightly, right? Because I'm using Google, right? But Google, you have Google Slides, you got Microsoft, you got uh PowerPoint. Why didn't y'all go acquire Canva and like Google? Why didn't you acquire Canva and integrate that? I just don't know. So y'all not worried about them. Netflix reportedly told employees it targets becoming a $1 trillion market cap company, and they want to double their revenue by 2030. Like what? Right? I'm saying, would that make a lot of sense? I'm just here. I don't know. To them, no. But I'm just looking at the landscape. I'm just talking. I'm just thinking about what I personally would do if I was the CEO of a company. And I think Canva makes like $3 billion in revenue per year annually, which is good. And they're a software subscription company. I have a script subscription on Canva. I don't even pay attention to it. I like using all my features. I like using all of them. And they got the new AI tools. Ooh, it's gonna get scary. It's gonna get scary. Now they're literally allow, like you can create custom charts on Canva just from giving it data. Like it's making it easier for people who don't know how to do that type of stuff to be able to do it. So a lot of skills like niche jobs and just like learning the platform and knowing the platform, I think that is definitely about to be taken out. And if you watch Earning Leisure, um, they have Morgan on. Morgan's from St. Louis. Shout out to her. I'm from St. Louis, so shout out to everybody from our hometown. But she was talking about how you gonna have to get out your industry. I be telling people all the time, I'm like, man, AI gonna take your job. No, she said no, AI is gonna take your industry. So I've been wrong. It's not gonna take your job, it's gonna take your industry. That's why I personally think the safest thing to do is invest in the stock market. Because regardless of how it goes, the best companies are always gonna have the best data, the best information, and they're gonna use it at scale the best way possible. Even though they might have lack of, they have the money and power behind it to reign forever. So I personally think the safest thing to do is to invest, because if you're uncertain about the outlook of the world, these companies are always going to find a way to be great. So if you like investing in a company that's going to do amazing in any environment, I think that's a very, very safe and logical thing to do. And then obviously stacking leaps, and then learning how to trade would be nice as well. But like, just long term investing alone can make you a lot of money. If you have like a lot of capital to play with, I would even say if you can start off with 20, if you start off with 20,000, boy, I'm in 2 years I'm gonna flip that to 40 off a long term investment alone. 100% return in 2 years, easy, easy. So, and if you're thinking about it, you made $10,000 in passive income over a 2 year period. So you got to think long term. Even if you just long term invested, if you flip 20K to 40K, and I don't want to say flip because that's giving short term mindset. But if you turn 20,000 into 40,000 from long term investing, that's an extra 10,000. That's being added to your net worth over those 2 years. And then if you have 40, now you have 40,000, and let's say you only get 50%, right, over the next 2 year period. Um, Now you're at 60,000. So over a 4 year period, you turn 20,000 into 60,000. So, and then you got compound interest. Okay. So Canada is granted a tariff exemption to automakers that stay. Um, the emission granted to these companies. Oh my God. It's a lot of chess moves being played, man. It is a lot of chess moves being made. So Canada, they basically said you can what we doing? What we said basically, they said that you can you can be tariff free if you manufacture your cars here, but you have to keep your cars here. And the market we pushing higher. Nasdaq up 0.73%. S&P is up 0.67%. The Dow is up 0.5%. So we pushing up. So y'all see how when Trump shuts up, the market just happens. That's gonna be my number one indicator for when the market gonna turn around. When he just be quiet all the way. When he just stopped. They froze Harvard funds because they were that was crazy. Elliott has built a large position worth more than 1.5 billion in Hewlett Packard Enterprise. Let me see. HPE stock is only $15. Oh yeah, this rally ain't lasting. This rally ain't lasting. If we push up on low volume, so Crystal, she was just talking about volume, right? If the market pushes up on low volume, that means you need hedge funds and institutions to push the market up. So if we're rising on low volume, that tells you that institutions and hedge funds are not participating or adding to the market rising, which means they are not putting capital into the market at this time to push it and force it to go higher. Meaning it's probably not gonna last. Let's check on NVIDIA. NVIDIA, no video, A video, B video, however you say it. NVIDIA. The president told you buy NVIDIA today. The president told you buy NVIDIA today. He said NVIDIA is pledging 500 million or 500 billion to build the supercomputer in the United States. And he put the ticker. He put NVDA. Like, is this how? If the president is partaking in insider trading and telling the whole world to buy a stock, how you not gonna get Nancy Pelosi? Mm-mm. That's over with. You're not gonna catch Nancy. Trying my best, man. I'm trying my best. I can't compete with that. I'm trying my best though. All I can do is try my best. But if Trump come out and say bye, man, I don't know. Patience, 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 patience. So when you wait and you get let's say if you are because I've been sitting here for like I think almost 2 weeks now. Well, like a if come Friday it'll be 2 weeks. But it's very, very important to be patient. But that's why I always say my affirmations. If you feel your emotions, um, kind of like I don't want to say taking over, but if you feel your emotions creeping up on you, you got to learn how to deal with your emotions. Your emotions are not going to go away. They're your emotions. You got to feel them. You got to express them, right? But you got to manage them to the best of your ability. So I always say my affirmations. I'm calm, I am patient, I am disciplined. I'm strong and consistent. I trust myself. I operate in abundance. I move with God. I am a great trader. I follow my plan. I follow my system. I do not deviate from my plan. I do not deviate from my system. I'm calm. I'm patient. I'm disciplined. I'm strong. I'm consistent. I trust myself. I operate in abundance. I move with God. I am a great trader. I follow my plan. I follow my system. I do not deviate from my plan. I do not deviate from my system. I'm calm. I'm patient. I'm disciplined. I'm strong. I'm consistent. I trust myself. I operate in abundance. I move with God. I am a great trader. I follow my plan. I follow my system. I do not deviate from my plan. I do not deviate from my system. Mm, mm, mm. Good testing, man. Look at Tesla, man. Tesla. When I be investing, I be looking at these stocks like I got kids. Tesla's like that one troubled child you got, that one troubled child you got, but they gonna get it right. They gonna get it right. They gonna get it right. Bitcoin. Let's see what Bitcoin doing. Bitcoin at 85. I mean, it was 109. Everybody like, it's not gonna go no. It's not gonna drop no more. It's gonna go to 150,000. I missed it. No, you didn't. I, our inability to wait 3 months is what's stopping us from having a 50% return. That's all it is. Our inability to have patience for 3 months. I waited, I think, 6 months. Okay, here's what I will say. Ever since I very first started investing, I've never ever been a person that invests my money often. When I say often, I mean like obviously I'm putting money in my account, but like actually allocating that money, I was never ever investing on a weekly basis or a monthly basis. Adding money to my account, yes, but actively like moving that money to a position, no. I've always waited 3, 6, 9 months for an asset to come down for me to get an operator, for me to get an amazing opportunity. And even like some people they'll say, well, you're missing out on the returns or the gains on the way up. No, I'm not. No, you're not. Buy it on the way up. You can have a strategy for that. It's not the best strategy, but you can do it. And then how much are you going to be upset when the market pulls back like it did now? Okay, like if you bought Palantir They beat earnings, pushed up 20% in a day. I remember that like it was yesterday. They beat earnings. I think they pushed up from what, uh, 100 to 125, and then you bought it at the top because you thought they was gonna keep running up. Then you see you down 50%, and then you panic sell, and then I'm buying it when it's 50% off of the high. So I got a higher return than you. My emotions and mental space is better than yours because I bought at an amazing price, so I'm confident from entering there. So like it's really the psychology part. I just have if someone was to do that, it's not even the fact because you're gonna make if you hold it, you're gonna make money. So honestly, I don't really if you buy the top, I don't want you to, but at least you buy it, you investing. So I'm not gonna be mad. If you hold it for a long time period, it's not gonna matter. If you hold it for 5 years and you think long term, it's not gonna matter, even if you buy it at the top. Investing at the top is better than not investing at all. Even if you like if you bought the S&P at the top, you still have a decent return. So, but it's really just the psychological part. That's what you have to win at. You have to win the psychological part. A lot of it is fighting with yourself, um, mastering your own emotions, being disciplined. Man, like Canva, Google, Canva on y'all bumper, V2A. They got Canva sheets, both create, transform data into visuals, bring live data into your designs. That's API integration. Connect your data from work apps like HubSpot, and Google. Find the story in your data with magic insights. Uncover patterns with AI in your data and add it to design in a click. Let magic formulas do the math. No more memorizing formulas. Just ask magic formulas for the answer. Dog. Turn any design into a website. Generate custom speaker notes with Magic Word. Your wish granted. Send us a wish of your own. What would you love to see in Canva next? Let us know and we'll work our magic. You see how they ask the people what they want? Do you see Apple having a poll on Instagram or Twitter? What product do you want from us? The easiest way to innovate is to ask the people of your product what you want or see the need and act on it instantly instead of waiting. Man, tell Canva IPO. I can't wait for that one. Tell Trump chill so they can go ahead and get on that. So they can partner with Goldman Sachs, Bank of America, J.P. Morgan, Microsoft, Nvidia. Yeah, yeah. Tell Trump chill so they can go ahead IPO. I'm waiting on that one. I'm waiting patiently for that one. Palantir pushing up. It's at 96 now. So that's good. Um, Nvidia is at 111. Waste management slept on company. While the market is down, waste management is 3% within their all-time high. 3% within their all-time high. Very, very slept on company. Nobody talks about it. If you bought it, if you bought it in July of 2024, you're already up over 20% on it. So we cannot knock a 20% return. We cannot knock that. We got to be grateful for a 20% return. Um, so that's amazing. And then if you bought it in September of 2023, which was is a key month for you to start investing, you are up 50% on it. So in less than 2 years, you got average so far 25% return in a retirement portfolio. So waste management is doing good. Striker, very, very slept on company. Um, Striker has about 20% upside to its all-time high. Like imagine averaging 20% in your retirement portfolio. Procter and Gamble. Slept on company. And I used to work at Procter and Gamble. Procter and Gamble was definitely like a Procter and Gamble is a great company. It's a great company to work for. They're a great company to invest in. They have a monopoly. So when I always say how Apple dropped the ball because they failed to go buy up all the other companies, I'm about to show you guys. Like, okay, if we just go to Google, you type in Procter and Gamble brands. Look at all this that comes up. Febreze, Dawn, Charmin, Tide, Bounty, Swiffer, Head and Shoulders, Oral-B, Cascade, Crest, Gain, Pantene, Folgers, the coffee. My grandpa I think he used to have that. He always had that red can. Always had that red can. Pampers, Duracell, like Gillette, Downy. So while you think you have choices and you have variation, usually it's one company at the top getting all the profits. But um, like this is a good image right here. Um, yeah, this image right here. So if you look at Coca-Cola, see all everything that they own, Procter and Gamble. Yeah, let me see if I can zoom this in. Like see if I can find a picture. Don't hide the picture now. There we go. And then let me see if I can zoom it in now. Okay. So you got Pepsi, Coca-Cola, Nestle, Kraft, Johnson and Johnson. Mars is one that a lot of people don't talk about because it's privately owned. You got Yum Brands. They own KFC, Taco Bell, Pizza Hut, A&W. But if you look at Procter and Gamble, you see everything that they own. Tampax, like They even got ownership in Boston and Lacoste. Like, come on, dog. Nike, you on the clock. You've been on the clock. So when I say like you need to have like the company needs to invest in a bunch of sub companies. Like once you get big, you have to just be a private equity company. Honestly, you have to be private equity. You need to buy up all the companies that are your competition because if you don't, then they're going to get big and take market share from you. When you could have bought them at a lower price, so it's going to cost you. It's going to cost you more. Um, so, but you look at Pepsi, Quaker Oats, Chewy, Lay's, Cheetos, Fritos, Ruffles, Doritos. So all the different brands that you see is actually owned by one company at the top that has monopoly. Even if you look at Johnson and Johnson, I can't see much, but I see Tylenol. Um, so everybody laughing and trying to act right. Come on, dog. Just come up here real quick. That's it. That's all I want you to do. I just want you to go the extra mile for me. Just go the extra mile for me. You know what I mean? It would be nice. It would be greatly appreciated. We would greatly appreciate it. Um, and usually like now, like what I'm seeing, whenever I do have trades, they usually come all within the same like it'll be spurts where I won't trade for like a week or like 2 weeks. And then all of like the alerts start going off around the same week or like in the span of the same 2 weeks. And it just be like bam, 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 bam. But yeah, Kraft, Pepsi, Coca-Cola, the companies to invest in for sure. If I'm looking at Coke, I'm gonna start doing sector rotation just to see if I can beat the hedge funds that they own game because I want to play it. I want to play it just like them. So for the retailers, I'm gonna keep the strategy the same because that's how you make the most money, right? I don't really like sector rotation, but I'm just looking at it. If I was to sector rotate, because if you get 20%, then you got to pay the taxes on it. So let's see. So if I return 20% and I had to pay a 35% capital gains tax, that lowers my percentage from 20% to 13%. So not like ah just thinking of doing sector rotation just oh man, it makes my head hurt. But If I did that on four, if I did that on four companies, and I got 13% on each one, so that means for every $100, it's $13. So if I did that by four, so if I had four companies and I put in $400, my return would be $52. Like sector rotation just does not even make sense. It does not make sense. It don't make sense. Like once you factor in taxes, it don't make sense at all. But but if I got 13% from Coke, and then I do set the rotation with NVIDIA, like in another tech company. What's the easy one? NVIDIA is easy. AVGO is easy. So like NVIDIA and AVGO as a pair to set the rotate. European Union expects U.S. tariffs to remain as talks make little progress. Back down we go. Back down we go, man. We are engaging in tariff talks while China is out innovating us in every aspect. They kids got the little band on their head. I don't know what that is. They got the little thing. I don't know. Why does not why does Apple if I was the CEO of Apple, okay, to make money, so to make money, you have to solve a problem. So even me, I'm gonna give y'all a game because I want you guys to go build your own company. To be successful, you have to solve a problem. So me, I saw that a lot of people were investing at bad prices, not having the discipline, not having the patience, not having the correct guidance of where to buy, when to buy, why we are doing this, why we are doing it, why it makes sense to do this versus doing that. So when you come out and you give a solution that will lead to people, trusting you, believing in you, trusting in your vision, right? So Apple, we have a problem with our education system. Build a product that is going to help our education system. Like it's not that hard. I promise. You have to find the problem and build the solution. That's what they always say. If you watch Shark Tank, find the problem and then build the solution. So commercials, how everything is getting short, attention span is getting short. Instead of a 15-second commercial, you see how they went from a minute commercial back in the old days. You had a commercial was a minute long, then it was 45 seconds, then it was 30, then it's 20. Now it's around 15, right? So it's going to keep getting smaller, 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 going down to 10, going down to 5 seconds. Find the solution on how to make a very, very powerful and impactful commercial in 5 seconds. And that will lead, that's a problem that's being solved. If you have the solution, and it's no excuse now, you got AI, ChatGPT, Apple. What are you doing? What are you doing? Because I'm just looking, Microsoft is integrated in every business because you got like Microsoft Edge. So the NFL is using Microsoft, they're using the tablets. Every school is using Excel, PowerPoint, Outlook. If you're in college, you already know Microsoft is the backbone of every college institution. Regular school, So why don't you? Okay, if Bill Gates saved y'all the first time, wouldn't it like be smart for you to learn your lesson to not have to go through the same thing again? So if I was Apple, I would make a product that that you could help students, some type of product that would help students with learning, not the glasses thing. That's a luxury product. That's not leading to innovation. Like the product needs to be less luxury, more innovation that's actually helping and getting stuff done. Because all the VR thing is literally just everything that is in front of me right now. I got my computer here, second computer, and then my monitor. That's all the VR thing is, just on your face. Why do I need the VR thing if I got this right here? I got all the different tabs and TV right here. So you telling me on the Apple VR thing, I can watch TV, I can play the game, do this. I can do that now. I can do that now. Why do I need a headset on my face? So it just does not make sense. But if they created a product for students at scale that's like actively attributed to um the improvement of test scores or the improvement of, because Microsoft already has it on like the software side of how they're integrated with schools. So Apple, continue your partnership and your monopoly with Microsoft and have the hardware side of school. I'm just thinking, and even that might be over with because you got OpenAI and Microsoft owns 49% of OpenAI. I see kids that using ChatGPT, the voice tool, to capture the notes because they don't want to listen to the lecture in class. So I don't know. I don't know. I'm trying to think. I'm just trying to think. I'm trying to help. I'm trying to see what I would like Robin Hood is doing what Apple should have did. There's so many businesses that just took away from Apple. Like if I just go on the phone, I don't know. I don't know. Mhm. So if I can't really think of like 5 things to help a company innovate and do better, it's not gonna be a pick. It's not gonna be a pick. So and they still have not released a product, an AI product yet. A good one. Meta, Meta came out with one. Google came out. Y'all let Google innovate before y'all with their chatbot. Like, do better. But market has turned around, so now we're down. We're down slightly on the Nasdaq, and we're only up 0.13% on the S&P. So reversing those early gains that we had, and I told you guys it was on low volume, so it was going to come in. So we will see how the market plays out. Um, we will see how the market plays out for the rest of the day. But I'm about to hop off stream. you guys see the chart. So obviously, no interest today. We're gonna see if we get some tomorrow. Just being patient, waiting to see if we get our entry signals. But you guys, I want you guys to definitely draw the charts on your own, like go on the exact same company that I have, draw the charts yourself. So you can see it in real time and you can get accustomed to it. But as always, I appreciate you guys pulling up to the stream. We gonna do this again. I'll be back again same time tomorrow, 8 a.m. to 9:30 a.m. So I'll see you guys then. Appreciate all you guys for pulling up like always.